All right. Good evening, everybody. Welcome to week 3 of Chloe and Lauren Take Over the World and share all their financial knowledge with you. I am Lauren Williams, a certified financial planner, in addition to a 4-time Olympian. You all might be joining this page because you follow me in my Olympic pursuits. Those are now done, and I help people organize their finances. And I met a wonderful young lady while I was out learning about financial stuff. And Chloe and I have teamed up to help people better understand all about a financial professional tonight. So, Chloe, do take it away. Tell us about you.
Hi, everyone. My name is Chloe Moore, and I'm a financial planner, and I'm in Atlanta, Georgia, based here, but I work with clients nationwide, and I primarily work with high-income young professionals in their 30s and 40s, primarily in the tech space.
I like it. I like it. In the tech space, what does that mean, like in the tech space?
Well, and with tech employees. So yeah, my clients are employees of major tech companies, and some work for startups or private tech companies as well.
Gotcha. For those of us that are not in tech, it's not like that. But we are both financial professionals, and tonight we're going to talk all about the different types of financial professionals. And I think it's important because I think we get a bad rap. People think that they don't want to hire a financial advisor or work with someone because, financial advisors steal your money. I don't understand how they get paid. I have to handle my money myself. Why would I pay somebody to help me understand my money? There's so many different things about what the financial industry is, how it works, who I should work with, or how everyone, there's kind of this blanket, like you had one bad experience, so that must be how everyone is. And so we want to bust the myth tonight that financial professionals are all the same. And we want to give people good advice on what they can do to find the right financial professional for them. Because I think there's extreme value in the idea of hiring someone for their expertise and really reaping the value of what they have as it pertains to knowledge. So let's get started.
Yeah, definitely. So I wanted to start out with just the idea, you probably hear a lot of different terms when you hear about financial advisors. You hear financial planner, financial advisor, wealth manager, you hear investment advisor. There's so many different terms out there, and really none of these terms are regulated. Anyone can call themselves whatever they want to call themselves. So it's important to understand that, because some people might weigh in on one title versus another, or think that one means more than the other, but they really do not mean anything.
So let's go through some of the names of those things. There's the wealth manager. What does that mean? You don't have to have any designations or anything to call yourself that. If you want to wake up tomorrow morning, you start calling yourself a wealth manager, go for it. There is financial expert. Nah, don't think that means anything.
Any kind of self-proclaimed expert is usually not great.
Exactly. There is what do they call, like, well, there's financial advisor, so that's another one that's a lot more common, but that also does not mean anything. And we do kind of like loosely refer to ourselves, like, for me personally, I prefer people don't call me a financial advisor because it's such a broad term. But in general, people see financial advisor and they just say, like, oh, that's a term that fits a person who gives financial advice. So it's not that it's a bad thing, but in and of itself, that title does not mean that you're qualified, certified, anything, that you have taken any kind of licensing whatsoever, right?
Yeah.
What are some other examples?
Well, yeah, investment advisor, is another one. But yeah, and some people say broker. There's just a lot of terms out there. But I mean, I'd say in general, just try to focus on a certified financial planner. I think that's, for the most part, that's the industry standard when it comes to financial planning and comprehensive financial planning, is the CFP designation, which is Certified Financial Planner. And so Lauren and I both have that designation.
Yes, Certified Financial Planner. So when we think Certified Financial Planner, there are 4 requirements that kind of stick out. They call them the 4 E's. One is that you have a certain amount of education. So you need to have a bachelor's degree or the equivalent, some sort of education that would be similar. You need to go through the actual certified financial planning coursework if you've not received that as part of your bachelor's degree. And so complete the education. Now there's actually something they call the capstone, where you actually have to demonstrate that you know and understand this by creating a comprehensive financial plan. So they're doing that from an education standpoint. Then you move on to expertise. No, that's not an E. Experience. So first we have education, and then after we have education, then we get an exam. The exam it used to be a 2-day, 5-hour each day, so 10-hour exam total that you had to pass in order to earn this designation.
Yeah, that's the one I did.
That dates you. Depends on when you were when you passed the exam. Now they have this 1-day, 6-hour exam where you can just do you do it one and done basically. But it's still very hard. I think, what is the pass rate for CFP?
It's usually between 50 and 60%, I believe.
So not very high, right? You're not just handing these out. It's not something you can just go start studying tomorrow and then all of a sudden be ready to go and get the designation. So we got education, we take the exam, then there's a code of ethics. So that's something that's a really big deal, and I think we should spend some time talking about, because in the financial industry, like I said, we kind of get a bad rap. A lot of people hear me say I'm a financial professional and they start walking the other way. If we're in a networking event, they're like, I don't want this girl to start selling me some insurance. I don't want, I just don't want anything to do with this, period. And I think the code of ethics that comes with the CFP is an important part of it, because you need to be held to some sort of standards in this industry when we're dealing with people's money, which is their lifestyle. This is their life earnings sometimes. So talk a little bit about the idea that we have ethics requirement.
Yeah, so in addition to just abiding by a code of ethics, we have to get what's called continuing education. So every 2 years we have to certify that we've received a certain amount of continuing education. So we're continuing our studies in all the different planning areas, and we also have to do 2 hours of ethics training every 2 years as well. And so yeah, I mean, it's really just about doing what's right for the client, doing what's in their best interest, and making sure that we're operating, from an honest capacity.
Yes, because honesty is important, especially when you're dealing with people's money. And then last but not least, you need to have a certain amount of experience. And I think this is the thing that is most valuable, is this idea that you don't just pass an exam and then go out into the world and do whatever you want. In order to actually carry the certified financial planning marks, you need to verify that you've had 3 years of experience. There's one way that you can use 2 years of experience, but generally it's either 2 or 3 years that you've been doing this under the supervision of someone else. And yeah, you've got this locked down. You understand what it means to be in the financial industry before you can even call yourself a CFP. So you've studied a long time, you've taken an exam, you've committed to a code of ethics, but you're still not allowed to use the marks until you have a proper amount of experience. And I always think of this as like physicians. I don't want to go to a doctor that's like fresh out of med school and let you like cut me open and do open heart surgery on me. It's like, hold on, wait 1 second. That's why after medical school, you go to residency. After residency, then you become an attending. So even still, I feel like they let the residents do too much, but I guess they have to learn by doing. So don't give me a resident when I go to the doctor. Give me the physician that has already completed everything. But it's the same thing when we're talking finances. You want to make sure you have some level of experience and that you've been trained by someone before you just kind of let it rip and start giving out advice willy-nilly.
Yeah, definitely. And it could go either way. I mean, and from my experience, I actually got a bachelor's degree in financial planning, and I took the exam before I had the experience. So I had to wait until I received that experience to get officially certified. And most people, it might be the opposite, where they, have their experience and they've been in the industry for a while, and then they go sit for the exam.
Gotcha. Okay, so I think we jumped the gun a little bit because we're excited because we're CFPs. What we should have done is start by talk about the various phases that people might need to hire a financial planner. So sometimes it's not appropriate to get a financial advisor just yet. And that's fine. It's okay to be like, this is not where I am right now. I need to help myself before I can help, get the help of someone else. So can you talk a little bit about the idea of if you're just starting out, you're early in your career, you're not making a lot of money, you're in survival mode right now?
Yeah, so I generally think of 3 phases. And so this first phase is really, yeah, you're just surviving. And so, like Lauren said, you might be starting out early in your career, or you might be later in your career, and you're just starting to, to get to that mindset where, oh, I need to take this seriously. I need to start, saving for my future and paying down debt. And so generally in this first phase, you might have, some credit card debt, or, car loans, some consumer debt. Um, you might have student loans. You don't really have much savings. You don't have a full-blown emergency fund that you can rely on if something were to happen, or if you lost your job for an extended period of time or got sick. So you don't really have that saved up yet. So you're just kind of still figuring out, kind of how to manage your cash flow, what's coming in, what's going out, and just really kind of just making ends meet, just in that initial phase. So your idea there is that you want to build the basics, just learn those good financial habits, learn how to budget, learn how to pay off debt.
Yeah, I think this is a good point to bring up too in the communities of color, where there's traditionally been lower income and less resources and less financial literacy. You may even be in a situation where you're making what you feel like is good money, but you're still living paycheck to paycheck. And so it's not so much that you don't have money. Generally, people that have lower income, their resources are only going to go so far. That's everybody. 1 + 1 = 2. It doesn't equal 3 or 4 or 5. So if you only have a set amount, and your expenses, and your basic survival expenses match that amount, there's not a whole lot of extra wiggle room for you to be able to do anything. And so the first thing you need to do is create more income. But there's another situation where, like I said, frequently I'm seeing people who don't have financial literacy. And this is a problem nationwide. It's not just in communities of color, but I think it's exacerbated in communities of color because they don't have anyone passing down information to them. So they don't have a rich parent or a rich uncle or a rich, anyone around that has had any experience building wealth, gaining wealth, being responsible with wealth. And so now they're making something that could lead to them being wealthy later in the future, but they don't understand how to handle it. So as Chloe was saying, you don't have emergency savings, even though you have good income, and you've got to figure out your budget. So don't underestimate the importance of, finding information for yourself and sitting down and taking time. That's the biggest thing, is the investment of time. I think we don't really want to invest the time. It's like, this is going to be too hard. I'm not going to get it. I'd rather be doing something else. This is kind of a chore that's worthwhile because it's going to pay long-term dividends in your life. So setting up a budget for yourself, there's a great app that I use called You Need a Budget. It literally was a game changer in my own personal finances when I discovered that app. There are some free ones. So You Need a Budget is $84 for the year, which comes out to roughly $7 a month. And so a lot of people are kind of like, but it's an app. Like, who pays $84 for an app? And I'm like, don't think of it as an app. It's a software. You can use it on the computer and you can use it on your phone. But it's a great place to start if you truly know you can't hire someone right now, and every single paycheck you are just like, oh my goodness, this money went right out. I gotta pay Peter, I gotta pay Paul, I gotta pay so-and-so, I gotta pay such and such, and there's already nothing left over. The first thing you got to do is really see where money is going, take inventory, and then move on from there. That might be the reason that there is some debt, or there may just be, like I said, you need to get additional income. So, if you're in a situation where you can't, think about the DIY things that you can do. So what are some of the other things that you can do kind of to get yourself going, Chloe?
Yeah, so a couple of things to add to that. If you are in a situation where you're just barely making ends meet, you really can't afford to get the help. There are some resources out there. In addition to just Googling and looking on the World Wide Web, and finding blogs and podcasts and books and just resources like that. There is a foundation for financial planning, and so they offer some pro bono services. There's also the Financial Planning Association, and so they have local chapters all over the country, and they do a lot of pro bono work. I'm a member of the Financial Planning Association here in Georgia, and we are constantly, as a chapter, doing pro bono days and financial planning days where we offer free services to people who are in need. So that's an option that's out there if you really do want some one-on-one time and you can't afford it. And then the other thing is, if you do have a little bit of a budget, like Lauren said, there's the apps and things that are out there that are pretty low cost. And then there's also just there's some DIY classes and courses that you can take online, where you can go through all the curriculum of building up that basic financial plan, learning how to budget, learning how to pay off debt, and just getting those habits in place so that you can get to the next level.
I like it. I like it. I like it. We got lots of options. I started dropping some of the links in the chat. I'll drop more as we kind of go on. Of course, if you're on and you have questions, don't hesitate to reach out. Just hit a comment. I'm checking over there as well. Uh, okay, that's kind of like level one. Like you said, you're just starting out. So you're either fresh out of college, you're a young professional in your early 20s, or you're just kind of early in your career where you're earning an entry level salary, or like we also mentioned, you're surviving, you have income, but you need to figure out how to stretch that income further, and you need to get organized and get the foundation in place before you can move on to step 2, 3, 4, 5. And we've done a lot of talking about building a foundation. We talked about home buying last week. The previous week we talked about different money myths that exist. And I think one of the things that people do is they're ready to invest and they're ready to buy a home before they have a good foundation. So they could make $150,000 a year, but be living paycheck to paycheck, have zero savings, zero. So no emergency fund. They might have credit card debt, and all they're talking about is purchasing a home. You first need to lay a strong foundation to build that home on. So if you're in if you're in that phase, don't be afraid to say like, okay, this is where I am. What can I do to fix it so that I can get to the things that I want?
Yeah, definitely.
All right, so if we're out of survival mode, then where could we be next? We could be thriving, right? Like if I'm not surviving, then I got to be thriving.
Yeah. So the next phase is you've kind of got those basics in place. You have an emergency fund. You've paid off all your debt. You might still have student loans or a mortgage, but you paid off any credit cards or any other like consumer personal loans. You might have a small car loan, but it's not significant and it's manageable. And so you're starting to get some surplus income. You have a little bit of extra, left over in your paycheck. And so you want to know, okay, what's the next step? Like I might be maxing out my 401k, or I'm not maxing out my 401k. Should I do that? Or where should I put all this extra cash that I'm kind of building up because I've gotten those good habits in place?
I think that brings up a good point. So it's like I have some discretionary income, but what do I do with my discretionary income? And how do I take, I'm making it, but how do I take my finances to the next level? So a lot of times you're looking for something like, I feel pretty organized. I have a budget. I don't spend more than I make, but I don't feel like I'm doing, like, I don't know if I'm on track for retirement. I don't know what I should be picking in my 401k. And so it's like you realize that you need additional advice to be able to optimize your overall financial life. And this may be when you're a good subject for something like hourly planning or a one-time project, or just to kind of sit down for an hour or 2 hours and pick someone's brain. There are financial planning options like that. And so, like I said, what you'll find, and I think we need to like really be honest about this, is like I said, the reason that 70%, or the reason that people are very kind of hesitant about our industry is around 70% of it is what we call commission based. Commission based being that someone is selling you a product. And so if you only bump into people who are selling you something and saying like, hey, do you have some money to invest? Hey, you don't have life insurance. Let me show you why it's such a great idea. And you are just trying to understand like what's in your 401k, you can be put off by that. And I think that's what happens quite a bit. It doesn't mean that everybody who is a commission-based advisor is a bad person, but if that's all you experience and you're not getting a narrative beyond that, because those are the big companies that you see on television, and those are the people you're running into at networking events, and they're trained in sales, so they're super aggressive. You may have been turned off by that, but I want you to know that there are other options, and there are lots of different ways to receive financial planning. So that's why I'm bringing up hourly planning, where you can just pay someone for the hour work, for the work that they're doing or how long it takes them to do it. There's one-time, consultations that you pay for. And then there's also this idea of, like I said, getting a project. So we call it a comprehensive plan, where they look over your budget, your debt, your investments, your retirement plan, your insurance, your taxes, your estate plan, all these different things that are your whole financial life. They go through and they do an analysis of all those things, and they give you the full picture of what your finances are doing and where you have room for improvement, and along with some action steps. So just know that exists.
Yeah, and I'll say that two really important things at this stage is like you want to maximize any opportunities. If you have opportunities that you take advantage of with your employee benefits, or tax opportunities to save on taxes, or just different things out there that you can do to help maximize what you have. And then you also want to avoid mistakes. And that's one of the great things about a financial advisor. They stand between you and your mistakes. And sometimes those mistakes can be costly, and they can put you behind, years when it comes to, getting to where you want to be long term. So really think about, just, the value of getting that advice, even if it is on a short-term basis. And another thing to think about too, just, consider where you are with your budget. You won't be able to get a comprehensive plan in an hour or 2 hours. It's going to be like a little bit of an investment to do a project. But, and I'd say generally speaking for, hourly or project, that's kind of the starting point or the entry level for engaging with an advisor. And if you want to do that, long-term and have that be your long-term plan is to work with someone on a project or hourly basis. That means you're generally, pretty savvy. You have some good financial education. You've learned, things from, family, or, you've read a lot and you're really well versed in that. And you just need somebody to kind of make sure that you're on the right track.
I love that. The make sure you're on the right track aspect of it. There are a lot of people that are doing really good things with their finances, but they're still not experts in this area. So you may be doing something right, but it's like, what else can I do to make sure that I'm going to the next level with my finances? So I think you also go ahead. I'm sorry.
Yeah, I was going to say another thing is that, there are people in this space who do, engage with an advisor long term. So, some people, they're not DIY people, they really do need some of that hand holding. And, if I gave you a list of recommendations, it'd probably just sit there because, you won't follow through with anything. And we did all this work and you're not, it's just going to sit there. So there are people at this space who, really could benefit from working with an advisor long term.
Yeah, I think that's a good point as well, is to be real with yourself. Every year for the new year, people say, this is it. I'm going to get my money right. I'm going to change my life. I'm going to start saving. I'm going to do so much better. I'm going to buy a house. Everybody has all these financial goals at the beginning of a year. And then a year passes and then they're like, next year, this is the year. This is going to be it. And it's the same thing with fitness goals, like finance, fitness, those sort of things that are hard to do. Like the accountability goes a really long way. And so if you are not reaching your goals, it's okay to say, I need help reaching this goal, and to invest in yourself so that you can reach whatever goal it is that you're going after. And it's worth paying a personal trainer if you are year after year, gaining 5 pounds instead of losing 10. It is worth, hiring a financial planner if year after year your savings is not where you want it to be, and you didn't know something, and you I think if we all sat down and thought about it, we could think of a mistake that we made because we didn't consult anyone. There is something that we could have done and talked to somebody about, and it would have saved us some money to simply have asked the question. For me, it's like I'm doing stuff in the yard right now and not getting 3 estimates. I got tired and I was just like, I can't find anybody. No one's calling me back. It's COVID. And I just went with like the first person, as opposed to calling a couple friends and saying like, hey, do you know anybody who does this? And them giving me a couple other results, because people who know people, will also connect you with people they know, like, and trust. But I wasted some money on my yard because I didn't ask the question. Simply asking people and getting wise counsel is very valuable, so that you don't waste money on something else or get taken advantage of in another area. So
that's a good word, wise counsel, because I feel like I see it all the time, on Facebook. Like people ask these random financial questions out to the universe, and everybody has an opinion, everybody has something to say, but these people are not all experts. So just think about who you're getting the advice from. What financial position are they in? And are they really in a position to help you? Do they have the experience, to be able to give you good advice?
Yeah. And where's their accountability mechanism when they give you bad advice? One of the things we talked about last week was credit cards, and the number of people that come and say, I'm keeping a balance on my credit card because I'm trying to build my credit. Keeping a balance on your credit card doesn't build your credit. Like, go do some research on that. That's not a thing. But all the time I hear it, and I've actually had people look at me and say like, oh, you must not be a professional. She don't know what she's talking about, because she just tried to tell me that I need to pay my credit card in full.
Yeah.
Like, go seek wise counsel, because you get multiple certified people, or people that are working in the financial industry will tell you the same thing I did, versus, your friends who all have credit card debt who say that they have great credit. And we, I'm not going to go back in the whole thing of last week, but you can look really good on paper from a credit standpoint, but not actually be financially healthy. So
Yeah.
don't keep a balance on your credit card is what I'm saying. Pay your bill in full every month.
Yeah, but they just like, last week we also talked about, GoFundMe is not a financial plan, or it's not, it's not, and so same thing, Facebook is not a financial plan.
Exactly.
So keep that in mind.
Yeah, and I think too, like I said, we've done a lot of talking to communities of color and kind of just bringing the point, like we're in a conversation now that's not traditionally been being had, and a lot of people have been turned on to the idea that there is a racial wealth divide. A lot of people are throwing around the term generational wealth and wanting to create that for their family. If you truly want to make a difference and change the trajectory for our people overall, the best thing you can do is invest in yourself and get your own finances on track so that you can. That's how generational wealth is created. You have to have something to leave behind, and it starts with you getting organized and dealing with what you have right now, getting advice on how can I do better so that there is something left over to be, to be handed down. So to not be afraid to say, all right, what is my role in the racial wealth divide? What is my role in creating generational wealth? Because I have generations coming behind me and I'm not doing my part, versus, let's all be angry about what happened in the past and not getting our 40 acres and a mule. Let's start focusing on right here, right now. What can we change? And it's trusting someone else to let them in to say, okay, this is what you need to do. And this is how you can make things better for yourself.
Yeah. And learning those basics, we talked about, I talk to people all the time. They make $200,000, $300,000, $400,000 a year living paycheck to paycheck. It's like you have a tremendous opportunity if you're making that much money to really build wealth. And if you're not taking advantage of that by learning the basics and living within your means and saving aggressively and doing the right things and getting help if you need it, then you're wasting an opportunity. And I'll say too, Lauren, you're an athlete. You're an elite athlete, and so you didn't do this by yourself. I'm sure you had nutritionists and trainers and people helping you. You weren't going on YouTube looking at workout, routines.
That's not how I got to the Olympics.
Right. But yeah, it's like when you think about, people who are at the top of their game, whether they're in business or, whether they're athletes, just anyone who's at the top of their game, they have help and they have people who are giving them good advice.
I love it. I love it. I love it. All right. So we talked survival, and we talked about, free options, do-it-yourself options for those who are in survival mode right now. You can do it. One other thing we didn't bring up for that kind of realm of people is courses. So if you can invest just a little bit in a course and, set aside the time, that's a very important part of the process is investment of time. If you're not investing dollars or a lot of dollars, and do those online courses, you can reap the benefit of having taught yourself. And so for example, I started a course and it was specifically meant to be able to give back to the community of people who don't have high income, are not quite ready, or fresh out of school, exactly what we said. And for me, it was like, okay, I created this big, vast thing. I talked to a lot of people about how much I should charge, and it landed around $1,500. So value-wise, based on what, other people are selling, this was a $1,500 course. But for me, I was like, I want people to get this information, and I want people who wouldn't traditionally be able to afford it to have that information. So what I did was divide it into 3 parts. And after each part is different than a regular course because you get to meet with a financial professional. So it's not just go off and do it yourself and teach yourself everything. It's go and teach yourself the stuff that I said, but then come back and let's talk about it and let's make sure you're digesting it and that you have clear action items into how you can, move forward with this thing. So courses is a really cool way to be able to take advantage of getting more financial knowledge, getting more expertise, and, doing it at a lower cost than it would cost to talk to a financial professional who spent, tons of time investing in themselves in the form of an undergraduate degree, a certified financial planning certification, annual fees and dues, continuing education. I think that's a lot of times too. People don't want to pay for advice because they're just like, well, the answer, so just give it to me and then I can go about my business sort of thing. But, we've invested a lot into this intellectual property, and it is our means of making a living to be able to share what we've learned with you. We're giving it all away for free tonight and then for the rest of the month, but you can't get it for free all the time when this is something that we're, investing in on a regular basis. I spent today researching a lot about a particular subject because I have a client that's in a unique situation. I'm going out and I'm doing the expertise so that you don't have to do that. And I have that knowledge for the next client that comes along. So
yeah, I mean, it seems really easy for us to, just answer questions off top of our heads, and give you these really quick and easy answers. But it took us years of experience and a lot, just a lot of time to be able to give you those quick answers.
Yeah, exactly. And I don't like to brag, but I can fix your student loan life in 60 minutes. Like, to something you've been dealing with for years and years and is super stressed out and you're just watching your loans grow, 60 minutes from now, you can feel amazing about your student loan situation. You can understand how you can save yourself tens of thousands of dollars. Understand clearly what you need to be doing in order to best tackle your loans. And it almost always leads to 5-figure savings when I talk to somebody about what they should be doing versus what they are doing. Like, to spend money to talk to me for an hour to save tens of thousands of dollars. I'm not charging tens of thousands of dollars for sure. Couple $100 and you can get a student loan plan. So to start training our mindset to say, sometimes it costs something and it doesn't feel good because I'd much rather spend a couple $100 on a nice meal or some shoes or, whatever it is that is your thing that you spend money on instead of this thing. But what is the long-term lasting impact of me purchasing it?
Yeah, definitely.
All right. So then last but not least, we have those who are ready to build wealth. So let's talk about the people that are really in a position to, not necessarily do DIY planning, not necessarily in a position to do this hourly planning, but really want to optimize their finances and work kind of long-term with a professional. What does that look like?
Yeah, so generally people who are in this space, they've saved a significant amount of money. They're saving a significant portion of their income, maxing out their retirement plans, and saving in addition to that and investing outside of that. They have significant savings for emergencies. They might have some short-term savings for other goals that they have, and they generally don't have a lot of debt at that point. Right. So they're really in a position where they can start building that long-term wealth, and they can start thinking about just more complex planning opportunities.
Yeah, I think you bring up a good point about like not having a lot of debt. I would say it's not having a lot of bad debt. I have plenty of clients that are, 6-figure earners and doing well and able to save, but they have a mortgage, so that's debt. They may have a car payment, that's debt. They may have student loans. It's just that they have a clear understanding of, their ability to pay those things, and they still have discretionary income after, tackling those things on a monthly basis. So it's not that you're completely debt free. But when you're in credit card debt, it's generally you're in survival mode. You're not thriving. That's like your regular monthly expenses. There's no discretionary income if you can't pay your credit card bill on a monthly basis. So we kind of use the terms good debt versus bad debt. Mortgage, it takes 30 years to pay it off. So that's not something overnight that disappears. Some people do pay it more aggressively, but you don't need to be 100% in ownership of your home before you can hire a financial professional.
Yeah, definitely. But yeah, so in that stage, it really does make sense. Like if you definitely want to take things to the next level, if you really want to, start thinking about, building that wealth for yourself and, possibly future generations, then it really pays to work alongside a financial advisor.
Yeah, and I know you mentioned at the beginning that you work with people in tech, and what I always think of when I'm thinking of people who work in tech is like, some startups, that there's a lot of stock options. Mm-hmm. So stock options are a really cool way to be able to build wealth, but also they're kind of complicated. And so it's hard for people to understand what to do. That's where, like you said, financial expertise could be super helpful for someone to get a good understanding of like how these stock options work, what's the best way to exercise them, when do I cash them out? If you're in a situation like that, you definitely need a financial planner. Shouldn't be DIYing your stock options.
Yeah, because I mean, there's tax consequences. There's different rules depending on the types of stock compensation that you have, and there's a lot of decisions that you have to make, and there's timelines for those decisions. So yeah, it pays to have some advice when you get to that point. And then I've also worked with people too who they might receive a windfall, whether it's if they were lucky enough to receive an inheritance, or they might receive a settlement of some sort. and just and at times like that, when you have any kind of big transition in your life, especially when there's money involved, that's a great time to get wise counsel.
Yeah, those are all really good points. Like you said, complicated situations. So, like, kind of what qualifies as complicated situations? Um, you have a child with special needs. You have children in general. You want to save for their education and their future. You're getting married. You're getting divorced. Those are usually big life-changing events that, getting married is something where you might want to talk about how do we merge our finances? How do we get together and get on the same page? Because I've just been doing my goals and that person's been doing their goals, and now we've got our goals, and like, do we get a joint account? Like, I don't know. Someone even talked through, I didn't have a good experience growing up because my parents split up, so I don't want to marry our finances. And then the other person's like, I love you, I want to be with you. Let's, it's all ours. Let's marry it. So just to have an objective person even talk you through that kind of stuff is a very valuable thing as well.
Yeah. I always feel like we're part counselors and therapists and part financial planners.
Exactly.
Yeah.
There's another thing that I want to talk about too when we're kind of talking about people that are serious about building wealth, and it's this idea of the FIRE movement. So FIRE stands for Financial Independence, Retire Early. And those people are not necessarily high earners. They're not necessarily like wealthy, but they're also trying to optimize their finances. Can you talk a little bit about like the idea of like what that looks like and how people are approaching that?
Yeah, so generally the FIRE movement is people, who they want to save aggressively. I mean, in some cases, 50% or more of their income to get to the point where they can retire early. And like Lauren said, they're not building, major wealth, and they're living pretty modestly, and that's what allows them to save so aggressively and to be able to retire early. So that they can, maintain like their standard of living for the rest of their lives and retire early. So yeah, I mean, I'd say most of the time people in that movement, are kind of the classic DIYers, but they have really, really good, foundations. They have good financial habits. They're not in debt. They're aggressive savers. They're good savers, and so that allows them to get to that point where they can like step away from work.
Yeah, and I think I read somewhere recently. Well, I don't think I read. I did read somewhere recently. I don't know that it like has stats or like who said it, if they were just saying it or if it's actual stats to back it up. But the average FIRE person makes around $80,000. So the reason I even brought that up was the idea that these people are not making gargantuan amounts of money to retire in their 30s or 40s. They're just being very serious about the amount that they save. And while I'm not like a large proponent of sacrificing everything and eating oodles and noodles for 10 years straight so that you can call yourself retired. That's not my personal financial plan. Mm-hmm. I think there's some validity to the idea of, at the end of the day, what we all need to do is understand our expenses, make sure that our expenses are less than our earnings, and then govern ourselves accordingly to save so that we can have a future similar. So what kind of lifestyle can I live? What kind of lifestyle do I want to be living, for the rest of my life? If I live really extravagantly right now, I'm going to need to save a lot to keep that really extravagant lifestyle going. And it probably behooves us to spend a little bit less so that we make sure that we have enough in the future and just kind of back off one step. Like whatever lifestyle we create, we're usually one step ahead of where we should be. We should kind of like, move it back a little bit. Then we can say like, okay, this is a little bit less than I'd like to be doing, but I can do this forever versus I'm doing this over here and it's really fun and awesome, but I can't sustain it over the long term. And then I'm going to be sad. That's what I think FIRE people do really well is like, okay, I'm sacrificing for a period of time so that I can have something over the long term that's going to create flexibility for me. And we can all train ourselves better to do that.
Yeah, it's all about balancing your current self and your future self. And so, you have to, like Lauren said, you have to think about, what kind of lifestyle do I want to live indefinitely? And what sacrifices can I make now so that I can maintain that lifestyle forever versus, just living it up now and not being able to ever retire or having to retire, later than you would like. But also finding a balance so that you're not, just sacrificing everything now. But yeah, it's just all about finding that balance, and advisors can help you advocate for your current self and your future self.
I like that. Advocate for your current self and your future self. And
Yeah.
I'll say too, I'm a financial planner that has a financial planner because I value so much the idea of having objective advice. So it's not that I don't have expertise to be able to organize my finances on my own. I do have that, but it's like, oh, but I want to do this and I want to, but oh, can I and I'll say too for my business. I love to invest in my business, but it's like the business is supposed to be profitable and it's supposed to pay. You can't just always have business expenses, Lauren. So
Yeah.
the financial advisor is like, oh, hold up 1 second. You gotta, bring it back and bring it down a notch. And there's value in that in and of itself to say like, okay, here's somebody who's objectively looking at my picture versus me looking at it on my own, despite the amount of expertise that I have to give me really good advice.
Yeah, and a lot of people who enjoy working with advisors, they're what we call delegators. They want to enjoy their life. They might have some of the knowledge. They might be pretty financially savvy. But they really just don't have the passion to do it, and they don't have the time to deal with it. So it helps to have someone else who can, like Lauren said, do all the research and all of those things that you might not have the time to do, or you might just not want to do. You want to enjoy spending time with your family or traveling or doing other things that make you happy, and not sitting around looking at spreadsheets and looking at numbers and figuring out your finances.
Right, where that stuff is fun for us, right?
Yeah.
The average person.
Yeah.
Okay, so let's talk about some questions to ask. If you're interested in hiring a financial professional, like I said, you have some reservations, you're not really sure. The main thing, maybe you don't know what you don't know. And so somebody's going to come and they're going to give you this awesome sales pitch and tell you how great their blah, blah, blah is going to be. And you're like, wow, that sounds amazing. But you didn't actually realize that, there was 10 other questions that you should have asked, or, they weren't actually covering the things that you want. So I would say the first thing you do before you even have the list of questions is really think about what you want. Mm-hmm. Do you want, I want help with my student loans. I want, to create a budget. I want to start investing in Bitcoin. I hope you don't, but even if you do, like, whatever your thing is, make a list of like what you want. So, and then start shaping your questions around those things, but then also start shaping your questions around, what should I be asking a professional to make sure that they're well within line of the guidelines of a person that's going to do a good job for me in the financial industry. So,
if you are ready to take that, did you want to say something?
Go for it.
Okay. But yeah, if you are ready to take that step to hire a financial advisor, and if you are in that stage, like we talked about the different phases where that makes sense, then yeah, there are some questions that you want to ask. The first one, make sure that like we said, they're a certified financial planner. If you can find someone with that CFP designation, that's the golden standard for all of the reasons that we explained before. Another thing that's super important is a fiduciary. You've probably heard the word fiduciary before, and a fiduciary financial planner. And so that basically means that we put your interests first. And so we're not out there trying to think about ourselves or lining our pockets, and that affects the advice that we give you. We really want to make sure that everything that we do is in your best interest.
Yeah, that is all very, very important. So CFP is what we say, because they're like physicians in the financial field. You can't call yourself a CFP if you're not one. And then fiduciary. So fiduciary meaning I gotta do what's right, and I actually am legally obligated to do what's right. So if I don't, there could be a problem. What's the opposite of fiduciary? Someone who's doing what's suitable. Suitability mean like, well, this is okay insurance, and you need insurance, so here you go.
So you can argue that it fits for you, but it might not be in your best interest. So.
Right. It's like, I'm going to get a fat paycheck from selling you this thing, so I'm just going to give it to you because it's suitable. You need some insurance. I'm going to pick the insurance that's going to get me paid the most instead of the one that's going to save you the most money. That's not fiduciary. That's suitability.
And fiduciary, think about 100% of the time. Are they asking them if they're a fiduciary 100% of the time?
Yeah, 100% of the time. That is super important. So yeah, in that same vein, the how are you paid? So there's fee only, there's commission only, there's fee based, which gets a little confusion. Mm-hmm. And so those are the three kinds of ways that people generally make money. I think I mentioned a little bit earlier that about 70% of our industry is commission based. And those are the kind of big firms that you'll hear about. So the Morgan Stanleys, the Northwestern Mutuals, all the Edward Jones, et cetera. So the big firms that you see on television on a regular basis are generally commission-only companies.
Yeah. Yeah, and if they're not commission only, they're some combination of fee and commission.
Right.
Yeah, Lauren and I are both fee-only financial planners, and so that means that we're only compensated by the fees that we charge our clients, whether it's a flat fee or an ongoing fee. That's how we're compensated. So we don't sell any products or get any commissions or fees like of any kind like on products.
So yeah, and I mean the thing too is that it gets a little confusing because there's also fee-based. So Chloe was just mentioning that some of the firms I mentioned and some of the bigger firms may not be commission only. They may be commissions and some sort of fee, and they refer to themselves as fee-based. So like I said, once again, we don't make it easy for you, but this is why we're doing this webinar right now, is to help you know there's commission only, there's fee-based, which is some fees and some commissions, and then there's fee only, which means you earn no commissions. It's just a flat fee that I tell you, I disclose to you, you make sure you understand. Whereas commissions, there's sometimes some underlying fees that you don't see, they're not being explained to you, and it's not super clear what the person who's working on your behalf is earning from doing that work on your behalf.
Yeah, and an easy way to know, if you ask someone, how much are they getting paid? Like if you have someone who's selling you insurance or selling you a product, ask them how much they're getting paid. If they're afraid to tell you, that's a bad sign.
That's a really good point, because they're providing a service, and a lot of times they make it seem like it's free. Like, oh, I got insurance, and they just did it out of the kindness of their heart. Mm-hmm. No, they don't walk around all day, every day selling insurance out of the kindness of their heart. So you should understand, like, I'm buying this thing. How much do you get of what I'm purchasing, so that you can clearly understand what that looks like. So there's that. And then, not only is there fee only, commission, and fee based, but then there's also AUM. So that's a type of way that people are compensated. So that's assets under management. So let's say that you have $20,000 in a brokerage account right now that you kind of saved up. You opened at a Vanguard or a Betterment or something on your own, and you've been saving. There's, investments that you have there, and you're like, okay, I don't really know what I'm doing. I just knew I needed to put some money here. I want a professional to help me, okay, now I'm going to have them help me. They may charge you a percent of the assets that they'll be managing on your behalf. And that varies quite a bit what percentage they're using. Generally, the more money you have, the lower the percent. So you pay less the more you have.
Yeah. Yeah. And another thing to keep in mind there too is, just ask the advisor, do they have minimums? Mm-hmm. So, they might have some places have a minimum amount of assets because, they're charging a percentage of assets under management. So you need to have a certain amount of assets to work with them. And then, versus someone who charges flat fees, they might not have an asset minimum. So just think about that. And then some people, have a minimum fee. Like I charge a flat fee, but I have a minimum fee that I charge to work with someone. So that's something that to ask too, to make sure, do your research and see, if you're a good fit for that person.
Yeah, I think those are all really good points. And, like I said, we talked about hourly already. That's a one time, 1 hour, or, it's going to take me 5 hours to do this, and this is my hourly rate. So this is how much it's going to cost you, sort of thing. Chloe just mentioned the flat fee, like this is what it costs to do whatever I'm going to do for you. Or ongoing fee. So a lot of people now charge what we call monthly retainers. Chloe and I both belong to a network that's called XYPN. And generally people who belong to that network will charge you on a monthly basis, some sort of fee, but it's still, like, I understand, like, it's $200 a month, period. There's no underlying cost related to that. So you just want to make sure that you understand that and that you ask those kind of questions as you're talking to someone.
Yeah.
Feel free to drop questions and comments. I see you all watching. So if you have any questions, I'm happy to answer them. Chloe and I are, and we're going to keep going.
Yeah. So the next thing is, ask about experience. So, what type of experience do they have? If you're working with an advisor, like if we talked about stock compensation before, if I work primarily with technology employees. So that means that, I have that expertise that I can carry from one client to the next. And if I have, multiple clients that work at a single company, then I know how their benefits work. I know, how their stock compensation works. I can help them figure out, are they in the right salary range for their position, based on their peers. So those types of things are very important. If you have, make sure that your advisor is experienced with working with people like you, and they understand your situation, or they have that experience to help you and what you need.
Yeah, I think that's a really good point too. A good time to bring up niches or niches, depending on how you like to pronounce it. There are financial planners that focus specifically on lawyers. There are financial planners that focus specifically on people in the tech industry. And then, it really runs the gamut. There's people who focus on physicians. There's people, I met a young lady recently that only focuses on people that are interested in taking a sabbatical. So they're going to do financial planning based on you wanting to take one or multiple sabbaticals. There are people who work only with dentists, so it could be by profession, it could be kind of by interest, it could be only women, it could only be single women, you name it, there's kind of niches out there. It doesn't mean that it's like, okay, well, I identify as this, and this. Let me go find a financial planner that does that. There are, like I said, my clients, as an example, are 30% athletes right now, 30% lawyers, 40% general young professionals. So those young professionals come from all walks of life, do all kinds of jobs, etc. So it's not that I only work with athletes and lawyers. But I also work with young professionals. So my clients are not in their 50s, 60s, getting ready to retire. If someone comes to me at that age range, I refer them to someone else who's focusing on that. Someone who's going to know a lot about Social Security and Medicaid, a lot about, what they need to do to change their assets to get, to take their income during retirement. Me, on the other hand, I'm focusing on the things that are relevant to young people. So that's student loans, that's, like I said, setting up your budget, starting to invest, all those sorts of things. So make sure you really understand what the person does and whether or not it's going to fit well with what you do. And if they're a good planner, they'll tell you like, hey, I'm not a very good fit for you, but I know somebody really awesome that does dentists. I'm going to tell you like, oh, you do tech? All right, let me call Chloe for you, or let me make an email introduction for you. And you should be able to find someone that's honest and willing to do that, because we all operate from an abundance mindset. Everybody gets served properly, and everybody gets served really, really well.
Yeah. And so I know we're getting short on time here, but I did want to talk to you about just the working relationship. So just ask the advisor, if you're interviewing people, how do they work with clients? What's their financial planning process look like? What topics are they going to cover? There's some advisors who, they only invest your money. They might not do some of the things that planners do. And so, Lauren and I, we both look at your entire financial situation. So we're looking at, insurance, investments, taxes, retirement planning, estate planning, your budget, your cash flow, debt management. So we're looking at everything in addition to your investments. So just, ask those questions. Do they work with other advisors? So, one of the things I do is I have a huge list of people that I work with, whether they're attorneys, CPAs, mortgage brokers, real estate agents, insurance agents, just so whoever my client needs, if I don't know that person personally, I will go out and find that person, make that introduction, and work with those people in addition to the client to make sure that we're all working together as a team. So just understand how they work with clients.
Yeah. And I mean, it's also, like you said, when we think about red flags, somebody who pretends that they can do it all and that they don't need any help is probably not a good fit either. Everything being under one roof is another risk that you take. So it doesn't mean that they're doing something wrong, but they'll say, oh yeah, we got an in-house estate planner, in-house insurance person, in-house tax. If everything is in-house, how are their checks and balances? So as an example, I've caught mistakes that accountants have made. And I've been able to say, hey, this is not the thing. If I'm doing the taxes and I'm doing the financial planning, there's no one to check behind me to make sure that everything is going correct. So when you're working together with different professionals, there's two sets of eyes on things. So just to be mindful of that. Like I said, it's not to say that one place that does it all is a bad place, but where are the checks and balances that are going to make sure you're okay?
Yeah. And then finally, just think about disciplinary action. So there are people out there who don't look out for your best interest. They do some shady things, and they get in trouble. And so that's something you always want to look up someone's background. And so there's a website, it's Broker Check, and you can look up anybody who's registered as a financial advisor. You can look them up and you can see their experience, their education, their background, where they've worked. And we also have a document, like a disclosure document, that we provide with all of our clients, and it explains how we do our business, how we charge fees, what services we provide. And so we're required to give that information out, and you can also freely search it online. And if there's any kind of bad marks or disciplinary actions that were taken against us, then those things are disclosed there and publicly.
I just dropped that link in the chat. So if you need it to check out your current advisor, I hope some people are listening that have financial advisors, and you can go back and you can ask questions and make sure that you understand how they work. And if you didn't previously know, get really clear on that. Because also another thing is that don't feel like you cannot ask your financial professional any questions. So once you've decided to work with them, don't just only take the information they're giving. Take whatever questions you have and say, hey, can you answer this for me? And if they constantly can't answer your questions, or they're not willing to, kind of break things down in a way that you're ready to understand, then it's probably another sign that it's like a red flag, and that's probably not the best fit for you. A financial professional should be willing to educate you, not just enable you in the sense of they're doing all your finances for you. Because if you don't learn anything, you don't know anything other than I'm paying someone to make sure that I'm okay, you're probably going to end up in not a great financial situation if that person goes away, or if your situation changes. You don't know how to say like, oh, well, I have a so-and-so and this is what it does, and this was our strategy behind choosing that. We actually had a planner in our community pass away earlier this year. Imagine if his clients didn't understand you didn't have a basic understanding of what they were doing or what their plan was, to be able to go to a new advisor and just say, I don't know anything. People be like, wait, what? How's this possible? So you want to make sure that you have a basic understanding of what your finances are, not just your advisor doing everything on your behalf.
Yeah. And so as to wrap it up, I know there's plenty of places. People always ask, like, how do I find an advisor? Where do I go? There are plenty of places where you can go. There's a lot of directories that are out there. So Lauren, you want to talk about a couple of those?
Yeah, so I've dropped quite a few of them as we've been talking into the chat. So CHIP and Quad A are both where you can find financial professionals of color. So I know, like I said, right now the conversation is being had a lot more, and it's not super easy to find financial professionals of color because as it pertains to CFPs, we are 2.2, they're 3.5% people of color of the whole industry that are certified financial professionals. And then of that 3.5, only 2.2% are African Americans.
Yeah.
So if you're looking for an African American financial advisor, you can go to Quad A. I already dropped that link in there. Then there's CHIP as well. So those are for people of color and the Latinx community. And you can find a financial professional specifically for that. The other two links that I dropped were XYPN. So anyone that's on that website is going to be a CFP, is going to be FeeOnly, and is going to be fiduciary, which we told you are like the main things you want to be looking for in a financial professional. But in addition to that, they're going to offer a virtual option for you. If you want to work with somebody all over the country, you can kind of take your pick. It gives you access to more advisors, but then also they're going to do retainer. So that's, like I said, they're going to allow you to pay monthly or quarterly or something like that, as opposed to just a one-time fee or whatever. It depends on how they choose to work with you. And then NAPFA is the other one. So they're also going to be CFPs, FeeOnly, and fiduciary, everybody on that site. If you're a little bit older and you're looking for someone, I would say pick NAPFA. There are young planners there as well. XYPN tends to cater to a younger audience, whereas NAPFA is a broader audience. So those are some good options.
Yeah. All right. So I guess we can wrap it up. But yeah, generally speaking, I'd say, just kind of parting thoughts is, just really think about what your needs are. Think about what phase you're in. And, hopefully we've given you some great tools to assess those things. And then you can find the help that you need.
Yeah. And my final thought is, don't be afraid to invest in yourself. This is not a huge undertaking. It may not feel good financially initially when you have to, outlay that cash. but think about the returns. We're talking all the time about investing and making our money work for us. The best way that you can invest in yourself is by having an expert alongside of you telling you, this is the way we can make your money work for you, and to be constantly thinking about ways to improve and optimize your finances. So find the right financial professional based on where you are in life, and best of luck.
Bye.